Hi guys, welcome to our Bishopsgate Meets seminar. This week we're talking to Gareth at Roots, who's going to discuss a bit about mortgages for us. Roots are one of our partners and provide great services to contractors. So we'll kick off with the first question, Gareth, and we might as well go in fairly lowbrow to start off with. What is a mortgage? Why would someone need a mortgage? And can a self-employed person or a contractor apply for a mortgage?
Brilliant. Thank you for having me, Luke. So first and foremost, fundamentally, a mortgage is a loan secured against a property. Most people, unless you're in a very fortunate position where you don't need to be borrowing money to buy a house, most people need to borrow money to finance the purchase of a property. There are different types of mortgages. So you've got residential mortgages for those people that are buying houses to live in. You've got buy-to-let investment mortgages for people that are looking to buy property to invest in. And then there are other types of finance, such as secured loans or bridging finance for people that are looking to do something perhaps more short term, like a renovation, that sort of thing. So three different types of mortgages. Most people need one because fundamentally house prices in today's day and age are massively outstrip sort of income. So house prices over the last 12 months have just gone up and up, which some say is a good thing, some say it's a bad thing, but it's a matter of fact that that's what's happened. But yeah, absolutely, self-employed people can get a mortgage. It's just, personally, I think it's an underserved part of the market. So what you'll find is most banks or building societies are looking for what we like to call the vanilla cases. So your average PAYE earner, 2.4 children, big deposit, buying a house to for them to live in, and it's a very straightforward thing for a lender to underwrite. For self-employed people, it can be a little bit more difficult because lenders look at a lot more scrutiny at those clients. So it could be things like how long they've been in self-employment for, what's the structure of the self-employment, are you a contractor, are you a limited company director, are you a sole trader, are you in a partnership. Then the makeup of the income can be different because for contractors, for example, there are lenders that look at day rate contractors, but also if you're a limited company director, they could look at your salary and dividends. And it's a very complex marketplace, and there's a lot more criteria around self-employed. Personally, I think unfairly, because I think there's no more certainty in employment than there is in self-employment, but it is an underserved part of the market. So that's why we exist here to help those people.
Which is great for the majority of our contractors will need assistance in doing this. They can't walk into a bank because of the flexibility they have in their employment situation. So looking at self-employed or limited company directors in particular, why is it harder? Why do the banks want the vanilla cases more than those guys? And what documentation do the limited companies and the self-employed people need to support their case in applying for a mortgage?
I suppose it's difficult for limited company directors in a lot of circumstances because, for tax planning reasons, if you're a company director that doesn't need to take out a lot of money from your business, you might leave a lot of that profits retained in your business. So, not everybody takes out every penny that they're entitled to, and that could be because you need the money to invest in business growth. It could be just to limit your tax liability, whatever the reason might be. a director's income is often quite different to a PAYE, where you're getting your £50,000 a year salary and you get the same amount every month. So what you find, there are lenders that will look at your salary and the dividends that you pay to yourself each year. So they'll look at your salary, your PAYE salary, which might be £10,000-12,000 a year, and then they'll look at the £30,000 worth of dividends that you've taken. But then there are lenders that will say, well, we know that you're entitled to a £50,000 dividend because that's what the net profits show. So we'll look at the salary and net profit rather than just the dividends. So you could have taken more, you've chosen to take less, but we'll underwrite it based on the larger figure because we know that you could have taken that if you had chosen to. So often for affordability purposes alone, it can be very complex because one bank might be able to offer you X amount of money, and then bank next door to them might be able to offer you twice as much because of what their underwriting policy is. In terms of documentation needed, everybody when applying for a mortgage needs to be able to prove a couple of things. So first and foremost, you need to be able to prove who you are with a passport or a driving license. It's got to be valid. You've got to prove where you live, and that's with a utility bill, such as gas, electric, council tax, water bill, that sort of thing, dated within the last 6 months. You need to be able to prove your incoming and outgoings, and that's by showing your bank accounts, PDF of your bank statements, and you need to prove what your income is. Now, again, that can be more complex depending on what type of self-employment that you've got. So again, limited company director, it could be your latest year's what used to be called an SA 302, but your tax calculations now, along with your corresponding tax year overview, which you can count, I'm sure can give to you, or your online portal can on the Gov website. If you're a contractor, however, obviously that's slightly different because you may have only just started a contract, or you may be halfway through a contract. So for contractors, it could be that they need to see 6 months worth of bank statements, plus the contract that you've got, plus a letter from the person that you're contracting to say that you're likely to have that contract extended.
And I assume for those guys that are, contractors within industries where they work, their jobs could be 1 week here, 2 weeks there, 6 months. So you're looking at their self-employed tax returns over the course of a number of years to show continuity of payments and income.
Yeah, absolutely. So basically, it all comes down to risk for a bank or building society. So they need to be confident and satisfy their own sort of criteria that they know that you're going to be in some a stable income environment. So it might be that you're contracting in different places, whatever that might be, but they need to see that you've consistently been earning good money, or whatever money you need to be earning to borrow that amount of money. What they won't like to see is earning £10,000 last year and £110,000 this year, because that's like, well, is that going to continue? Are we going to lend money based on 110,000 and then next year your income might up to £30,000? So it's all about sort of satisfying the risk profile of the lender and ultimately their insurers as well.
Brilliant. Then moving on, I guess the reason that we partner with you is because of the job that you have done for contractors in the past, the job we're currently doing for some of our contractors, and the expertise you have. But I think it would be pertinent to talk about why we need to use a broker when looking at mortgages, and why Roots in particular, obviously. If someone already has a mortgage, can they come to you and help with a remortgage? And I guess, when is the point of discussing the mortgage? When should we be looking at, oh, my mortgage is coming up for renewal? Should we when do we start discussing that? And what is protection, and why is it important? So if you can
Sure.
have a
So
go at those.
first and foremost, I'm a big believer that everybody should use a mortgage broker, because much like using an accountancy firm, you get an expert advice from people who understand the regulation behind it and what people are looking for, what lenders are looking for. So for us, we work with over 100 lenders. That's over 13,000 different mortgages. For a client that's thinking about getting a mortgage, it'd take them 2 weeks to spend an hour in every bank, 9 till 5, doing nothing else other than having mortgage advice. So 2 weeks out of your life, I don't think anybody wants to spend going around banks on the high. Yeah, that's even if you can find a bank on the high street
Yeah,
anymore, because
right.
they all seem to be closing down, don't they? But a broker's job is to understand all of the criteria and to filter down those lenders to the ones that are able to help the client. So by spending half an hour on the phone or on a Teams or a Zoom call with our advisor, they're going to be able to understand exactly what your situation is, where your case is likely to not necessarily struggle, but where the sticky points could be, and what we need to do to address them, and how we need to present that case to a lender. So our job is to understand exactly who's going to be the best fit for your circumstances. It's not just our ultimate aim is to get you the cheapest mortgage, but the cheapest mortgage that is right for you. There's no point ABC Bank offering a rate at 0.99 if they don't accept self-employed people. So you're going online and applying for that mortgage and getting turned away, it's going to hamper your credit report. So come to a broker and speak to them. Roots in particular, so Roots specializes, whilst we do offer mortgages to anybody, so we can help anybody that wants a mortgage, Roots specializes in helping contractors, self-employed people and freelancers, because it's a part of the market which I think the knowledge in the industry is probably suffering a little bit, so it's a big opportunity for us. So our team of advisors, they understand complex situations. They understand how income can be made up slightly differently. They understand that people might need to use retained profits in a business, or that they may have only just started a new contract but they've been contracting for 2 years, and which lenders are likely to accept that. So we want to make sure that our ultimate aim is to be successful for the client. So if they're successful and they get the keys to their house, we get the keys. We get our commission on that payment too. So that's where we work with that. When should people start talking to a broker? Fundamentally, if you're looking at buying a house, as soon as you decided you want to buy a property and you're thinking about it, come and speak to us. Make that the first thing that you do, is take mortgage advice. There was a study done a couple of years ago now, in the mortgage market, that 40% of people couldn't borrow as much money as they thought they could borrow. They might have been paying £1,000 a month rent, thinking they could easily afford the £900 mortgage, but it's not what you think you can afford. It's what the bank tells you they're happy for you to pay each month. And 20% of people couldn't borrow money at all, and that could be for a number of reasons. It could be credit, problems with credit in the past. It could be that you've only started self-employment yesterday, and you've not actually earned any money yet. So it could be a number of reasons. But if 40% of people can't borrow as much as they think they can, and 20% of people can't borrow anything, that means 60% of people can't do what they want to do. So speak to a broker as early on in the process as you can, because then we'll be able to show you exactly what's available to you. It could be a positive thing. We could actually show you that, it's no secret at the moment there's a bit of a shortage of houses coming to the market, bit of the time of year thing, and with COVID and Brexit and everything that's happening, there's a lack of property coming to the market, which I think will ease up into January, February next year. But if you're out there looking at the moment, maybe you're looking, I don't know, at £250,000 for a property. That's because you think that's your maximum budget. If we can show you a lender that's affordable to you, that they can lend you and you can borrow at £300,000, that opens up a big, maybe open a region or another area or another type of property that you weren't looking at before. So it can be a positive thing as well. So speaking to somebody as early as possible in the process is paramount. With regards to remortgaging is as important as buying a property and getting advice, because there are, again, 13,000 different mortgages in the UK. So our aim is to get you the cheapest one that you can and pay the least amount of interest on that money that you're borrowing. Remortgaging is much like car insurance. So every year you get your renewal through from insurer number A, and then you go and compare the Meerkats or whatever it might be, a supermarket website type of thing, and you put your details in and you get a quote. And then if you're like me, you spend half an hour on the phone to your existing insurer saying, well, they can do it for that, so can't you do it for this? That's exactly what our job is to do there, to say, if you're with a lender, they will offer you a retention product, but let us show you what the rest of the market can offer. And if that's going to save you £100 a month, that's a really, really worthwhile half an hour conversation to have. In terms of timescales for that, you really want to be looking at starting that process about 4 to 5 months before your current deal ends. So now we're working with people whose deals are ending in sort of March and April, because it does take a bit of time to get the changeover happening. We don't want to rush the process or run out of time and you end up paying a standard variable rate, which could be a lot higher than what you've been paying. So about four months ideally, before that process starts, get in touch with a broker and we can start to work out what's going to be the best thing for you.
Great. And just touch on protection.
Fab, yeah. So protection for us, we are mortgage and protection specialists at Roots. We have a standing joke. I've had this joke for the 15, 16 years that I've been in the industry, that ultimately a mortgage broker is a licensed loan shark, aren't they? We're a qualification away from being a loan shark, because we just arrange massive debts and we secure it against your house. And I'm pretty sure there's some very good mafia films about that sort of stuff, securing debts against stuff. But that's ultimately what our job is to do, is to raise an amount of money and secure it against your property. So in terms of protection, that can mean a number of things. What we need to, if anybody ever sees any adverts for mortgages, you'll always see at the bottom in big bold letters, it says, your home may be repossessed if you don't keep up the payments on your mortgage. And our job is to explain and educate the client around what situations could occur that could stop you from being able to pay your mortgage and therefore losing your home. Because it might be that, if you're a young first-time buyer, 21 years old, and you've got the world at your feet, it's not something you're going to think about. We all felt invisible at that age, and dare I say, hangovers didn't hurt as much at 21 as they do when you get older, do they? But it's absolutely that. So when people are buying together, if you've got children, if it's buying property with a friend or a sibling or something like that, it's really important that you consider, unfortunately things do go wrong. 1 in 3 people will suffer cancer in their lifetime. If you're taking out a 35-year mortgage, there's a high chance that 33% is not a great odd in terms of cancer, things like that. Cancer is one of 50, 60 covers conditions that be covered under a critical illness policy. So what if something happens in your life? What if something came along where we are all fit and healthy until we get run over by a bus? And that's the key. You can't plan for when you're going to get ill. If you can have a conversation around what your risk profile is and what things are likely to happen, if you're overweight and you're a smoker, you're at a high risk, so the policies are going to cost more. But ultimately, that's because you've got more chance of claiming on them. So our job is absolutely to educate people around, what do you want to happen to your home if X, Y, and Z occurred, and what do we need to do to bridge the gap between you keeping your home and you losing your home. So it's very, very important that people have that conversation and build perhaps a budget into their build a protection amount into their overall budget for buying a property.